Hi, we're back. I am back with my friend Cary Stillwell with eXp Realty and our new friend Kyle Evans. Kyle is with Liberty Capital Bank. And, first of all, thank you all for your feedback and interest in Eagle Mountain Lake. I certainly was blown away with the opportunity to invest in the Eagle Mountain Lake area. And now, so Cary and I, we kind of showed the sizzle. Now it's time to actually go and do, show you the substance. So we're going to show you those three properties that we previewed. So we're going to start with number one, which is the vacant land. So I'm going to go ahead, share my screen here, and we're going to look at the vacant land. All right, everybody see this, right? Excellent. So here we go. For sale, 11 acres. Kyle, I am a residential lender. I cannot help you with this right here, but you can. So if someone came to us and said, I want to buy this 11 acres and I want to build a big home with a large lot, what do they do?
Yeah, that's a great question. I think there's kind of two prongs to what to do, and a lot of that has to deal with timing. So in this market, what we're seeing a lot of is first just making sure you can get the property, buying the land. So that's kind of one prong is, hey, let's make sure we have this piece of land to build our forever home, second home, ranch home, whatever that may be. That second prong, which we used to see when the market was less hot, I'll say, was doing both in one, saying we want to buy this land and we have plans. So typically what we're seeing right now is a buyer will go under contract on land like this with potential plans to develop, build on it at some point in the future. Typically, what we recommend to those clients is to set up an LLC with the ownership being the exact same that it would be for your home. So husband and wife or anything like that. Typically after that LLC will allow you to have a lot of legal liability protection for not just during the build, but then also after the build. It kind of helps move that away from kind of your estate. There's a whole lot of benefits to that I'll let attorneys get into, but it's typically what we see. And then we'll come in and do a land loan. That'll typically depend on how long, in terms of maturity, will depend on how long before the potential buyers would like to build. So typically that's between 12 to 24 months. We've seen some that say, hey, we want to go way down the road, and we've seen some go up to 5 years. But the biggest thing is getting together your financial information, very similar to how they would get it together to you, Ron. So then, last couple of years of tax returns, current income, personal financial statement, and then the contract. And then the biggest thing is making sure you find a lender that you can have a relationship with and can kind of, almost in a sense get pre-qualified for. When you get into purchases like this that cannot be done by kind of a residential lender, you're getting more into kind of commercial purpose loans. So the pre-qualification process looks a little bit different, and that really relates to credit pull usually, which doesn't normally happen on the commercial loans at the front end. And then that's kind of how it goes. And what we like to see are buyers who know what they want to do, looking forward and saying, hey, Kyle, I'm thinking about buying an 11-acre piece of land. I found one that is worth this. We don't know if we want to pull the trigger. What does that look like? And a lot of times that can be really helpful for a potential buyer to know where they sit from a qualification process, where a bank, any community bank, can kind of look at the entire underwriting and say, hey, Ron, I know you want this 11-acre piece of land and you want to buy it for X price. We think that you're pre-qualified to be able to buy that at X price. And then you can also at that same time have that conversation, which is also beneficial to the buyer of, hey, if you want to build and develop something, you guys can support and qualify for that land. But also, we can look at, another $1 million in terms of the actual development. Usually that really kind of helps you figure out where you want to be, what you want to do. And the earlier you can kind of at least begin the conversation is usually the best for both buyer and bank, and makes the process much smoother for all parties.
My gosh, that is so helpful. And Cary, do we have an idea of what this property is, or should we just say it's $1 million?
It's not $1 million. 11 acres is not $1 million. Sure. I mean, if you get 11 acres at 12 grand an acre, you're doing pretty good in Parker County. I would snatch it up in a heartbeat. 15, you're still okay. 20 is getting over the top at this current market value or at this time, right?
Mhm.
But what we're seeing out there is enormous expansion, which is the point, right? And it won't be long until 20,000 is the 12.
Wow. Got it. Got it. And Kyle, how much would someone need to put down? You know, we always hear about down payments, and that's obviously a consideration. So you have down payment and you have closing costs. So if somebody just wanted to, you know, to get in, right? Cary's, you know, has told us this is a great opportunity and a great market. If I just want to buy a lot and then develop it later, what do I have to put in?
Sure. Yeah. When you get into lots of this size and commercial loans, it's going to look a little different than what people have in their mind from a consumer or a mortgage perspective. So typically somewhere in the 20 to 30% range is what you're going to look at in terms of down payment. Typically that's going to be a little bit lighter on down payment for the land, knowing the project or the build is coming soon down the road. So if Ron, you're under contract to buy this, you're going to hold it for 12 months. During that 12 months, you're going to develop plans to build. Typically, that would be probably about 20% down, and that's usually the minimum for most commercial loans. And then knowing that the lender, as they do their underwriting on this, might get you closer to that 30% down, but that additional equity will come later as you get closer to the build of whatever your inevitable home is.
Awesome. So if someone wants to buy raw land, I would suggest they first go to Cary, make sure that whatever their plans are feasible. We talked about in the video, if we have to make sure that there is water underneath it, right? We talked about the aquifer and all of those things, right? So we want to make sure that it fits their particular needs of whatever they want to develop it into. And then they go see Kyle, right? And they talk about, okay, now let's see how you can qualify to purchase this. So that's really helpful. So really appreciate that, guys.
Speaking of, may I ask a question of Kyle and you, Ron?
Sure, of course.
Speaking of wells, and in general, this raw land would require various kinds of infrastructure, well, a septic, road, driveway, survey. Is that paid in cash, or can that be incorporated into the loan?
That's a great question. Typically, what we'll see is someone with undeveloped land will put more down in cash in order to get the development rolled into that loan. So it is rolled into the loan, but there's a little bit more equity component up front for completely undeveloped land versus developed land that's got kind of a base ready to go to build on top of. But we've seen it both ways. A lot of that comes down to the location, the amount of development cost that goes into it, right? An 11-acre piece of land would probably have some different infrastructure going into it than 25 acres or 5 acres. But we've seen it both ways. Those are the two main factors that play into whether it rolls in or whether those would be in cash.